Ray, let's switch on to you then. You know, when we think about the investiveness, the investive attractiveness of a country, monetary stability and an anchor to the currency are important criteria. We know that. You have been a proponent of the establishment of a currency board. You actively advocated for it back in 2021. First of all, let's just start off by explaining to the room what exactly is a currency board and why is it the right answer for Lebanon?
Well, let me start by giving you a little bit of history. In 2021, I enlisted the top currency board experts in the world. It was the beginning of the crisis, and we came up with a plan that would have fixed the currency forever at 9,500 pounds per dollar. We didn't do it. What happened? The currency depreciated tenfold, salaries evaporated, and the qualified professionals left the country. Now, today, Governor Said is doing a great job keeping the currency stable, but we're still living with the same discretionary system. A currency board is a way to bring rules and structure to guarantee convertibility with a rule-based system that cannot undermine a fixed exchange rate.
How is it different from a peg?
How it different is, that's a great question. A currency peg is a political promise by a central bank to defend an exchange rate. But they still have the right to print or lend and fund the government deficits. And eventually, they break their promise every time. On the other hand, a currency board is rule-bound, doesn't have such discretionary powers to lend or to print. They have to have all of the currency covered 100% with foreign reserves. And they can only print new currency when their private sector brings new dollars into the country. So it brings trust by the credibility of the rules.
You say it needs to be fully backed by reserves. Does Lebanon actually have sufficient reserves for the establishment of a currency board?
Yes, it does. What it takes, what we need is enough foreign reserves to cover the money in circulation. If you look at the successful currency boards, the money base represents roughly 10 to 15% of GDP. Minister Psat explained earlier that the GDP of Lebanon is about 30 billion today. So 10 to 15% of that would be less than $5 billion to cover all of the currency that's in circulation. And that's all that's needed, because when new dollars come in, they basically fund the growth of the money supply. So once and for all, you put it down, you don't need anything more, but you have to ring fence it and protect it.
I guess one of the other questions that comes to mind is, after the collapse of the prior currency peg, the country has become mostly dollarized. So does it make the establishment of a currency board somewhat redundant at this point?
It's true, the economy has been essentially dollarized, but not fully. The private sector uses dollars, but the public sector still uses liras. So when you want to pay your taxes, you have to use liras. And all the companies and institutions in Lebanon today, they have the complexity of dealing with two sets of books, one in dollars and one in pounds. And I've lived as a board member with the complexity of that. On top of that, when the government gets taxes in liras, it cannot even spend them, because if they put the liras in the market, the exchange rate is going to go down. So it's not a sustainable system. And there are only two ways out. Either you go all the way full dollarization, which means that all the taxes and all the government accounts become in US dollars, like a country like Panama, for example, or you put in a currency board that gets you the discipline and the structure while preserving the use of the pound.
Yeah. Well, at the top of the panel, I teased that we have a surprise guest joining us. So I'm actually very pleased to say that John Greenwood is joining us remotely. He should be coming up on Zoom in just a moment. He's actually the architect of Hong Kong's modern currency board. So hopefully he will join us in just a few moments and field a few questions for me. Let's bring him in, please. John Greenwood. Okay. We'll wait a few more minutes for him to be patched in. I'll come back to John Greenwood when he gets patched in. Okay, we'll come back to this, right? You know, people say that maybe currency boards tend to be pro-cyclical. When reserves fall, liquidity tightens, recessions actually get worse. How do you navigate that?
It's true that the currency board mechanically, if there is a crisis, it actually forces an adjustment. But it's an early adjustment, and it's much better than keeping an artificial stability for years that's followed by delayed collapse. This is what we lived through a few years ago. Bulgaria in 1997 or Estonia in 1992 had short, sharp corrections. Once they went through them, they had a decade of long-term growth.
Okay, there he is. Hi, hi. Good afternoon to you. I guess it's afternoon in Hong Kong now. So I was just speaking with Ray Dabani, a gentleman who you know very well, about the potential establishment and why it perhaps might make sense for Lebanon to establish its own currency board. Let me talk about your own experience with Hong Kong. How long did it take for Hong Kong's credibility and inflows to return once the convertibility was guaranteed under the format of the currency board?
Well, once the new exchange rate was fixed in October 1983, stability returned within a few weeks, very quickly. Almost immediately, two things happened. First, money which had been moved abroad during the crisis, during the period when the currency was tumbling, started to return to Hong Kong. Second, investors, seeing that Hong Kong dollar interest rates were higher than US dollar interest rates, and now the exchange rate was fixed, moved capital into Hong Kong to take advantage of the higher rates, gradually pushing down local interest rates. Monetary tightness eased dramatically, and inflation came down at the same time.
Okay.
The same thing would happen in Lebanon.
Did it go smoothly? Did you encounter any problems as it went up and running?
Yeah, it worked pretty much from the day it was implemented. After all, the mechanism was not entirely new. Britain had used sterling-based currency board systems in most of its colonies in the first half of the 20th century, in places like the Caribbean islands, in Nigeria, East Africa, and Hong Kong itself from 1935 to 1972. And none of these had ever failed. However, in 1983, I'd say there were two kinds of problems to be overcome in Hong Kong. The first was, and this was a big problem for me, there was widespread opposition to a currency board from academics, from bankers, from government officials in Hong Kong, and even from organizations like the IMF. I think in recent years, the IMF has come to understand a currency board, but for years they were antagonistic to currency boards. However, I secured very strong endorsements from key economists. One was Milton Friedman, who was a personal friend. Another was Alan Walters, who was the economic advisor to Margaret Thatcher, the Prime Minister of the UK, and Charles Goodhart, a very distinguished economist from the Bank of England. The three of them agreed that a fixed exchange rate system was best for a small, open economy like Hong Kong, and that the currency board mechanism was the strongest type of fixed exchange rate. So that was one problem, but we overcame that, the opposition. The second was, of course, the system has had to deal with numerous disruptions and disturbances in international financial markets, such as the Tiananmen Square demonstrations in Beijing in 1989, the Asian financial crisis in 1997-98, the outbreak of SARS, the respiratory disease in 2003, the global financial crisis in 2008 and 2009, and of course, most recently, the COVID pandemic. So the system has been tested by all these types of episodes. Now, usually that required some degree of interest rate and asset price adjustment. But the exchange rate has remained unchanged now for 42 years.
Yeah.
Inflation has remained low, and the economy has continued to grow. So I see no reason why that shouldn't work in Lebanon.
Okay. So just to round things off then, how is the system operating today? By the sounds of it, it's still operating very smoothly. How long do you think it's going to last for?
Yeah, well, it's very robust. And having overcome all these threats and crises and various speculative attacks since 1983, it's in good shape. At the same time, Hong Kong has been able to become the major international financial center of Asia, handling huge inflows and outflows on a daily basis. In my view, the system can last indefinitely as long as the US dollar continues to be a stable anchor. So I see no reason why Lebanon, if it adopts a currency board system, should not once again perform a similar role as a financial center in the Middle East. Thank you.
John Greenwood, thank you so much. Thank you for your participation.
You're welcome.
I want to reinforce a point that John Greenwood made. He said that a lot of money flowed into Hong Kong when they put the currency board in place. Now, the currency board is not going to handle the bank restructuring. That's the government's domain. But once the banks are restructured, who's going to attract money to Lebanon? If there is a currency board, there will be an interest rate on pounds which will be higher than on the dollar. And yet there will be no risk, no convertibility risk, and no exchange risk. So sophisticated investors from overseas will bring money into the Lebanese banks to take advantage of that arbitrage. And money will flood into the banking system. And for the first time, the banks in Lebanon will be able to have those to go and lend to the real economy. I mean, for years, all what banks did in this country was put the money at the central bank and get, through financial engineering, didn't help the economy. If we do this now, money will flood in, they will have the money to lend and to grow the economy. As an international investor, I mean, we at Invest have invested, for example, in Brazil. We got great returns in local currency, and then we watched that return being diluted by the depreciation of the real. So that's something we worry about. So if we have a currency board, there's no more risk of loss because of the exchange rate. And that is very encouraging, and it will bring a flood of money to Lebanon.